Ever felt like you're trying to navigate a bustling city with a paper map while everyone else has GPS? That's often how it feels in the trading world when it comes to backtesting and charting. You've heard of FX Replay and TradingView, but how do you decide which one is your ultimate navigation system for refining your trading strategies? Let's dive in and unravel the key differences between these two powerful platforms. First, let's set the stage. TradingView is a household name in the trading community. It's a web-based charting platform used by millions for its extensive charting tools, real-time data across various asset classes like stocks, crypto, commodities, and, of course, Forex. Think of it as a comprehensive dashboard for market analysis. Its bar replay feature allows you to rewind and play back historical price action, which is fantastic for visual learning and discretionary traders. You can apply indicators, draw trend lines, and watch how the market unfolds. It boasts a massive community, offering thousands of custom indicators and strategies built with its proprietary PyScript language. This collaborative environment means there's a wealth of shared knowledge and tools at your fingertips. TradingView also offers a free plan with basic features, making it accessible for beginners to get a feel for charting and analysis, with various paid tiers unlocking more indicators, alerts, and historical data. Now, let's talk about FX Replay. While TradingView is a broad-spectrum charting powerhouse, FX Replay steps in as a specialized tool, primarily focusing on backtesting for Forex, futures, and crypto. Its core strength lies in its highly realistic market simulation. Unlike TradingView's bar replay, which uses OHLC, open, high, low, close, data, FX Replay uses tick-level data. Why is this important? Because tick data provides a much more granular and accurate representation of market movements, incorporating elements like spreads, slippage, and execution delays. This level of detail is crucial for serious traders who want to rigorously test their strategies under conditions that mimic live trading as closely as possible. FX Replay offers sophisticated analytics and journaling features that go far beyond what TradingView's basic backtesting provides. You get in-depth performance reports, P&L tracking, time-based analytics, and even Monte Carlo simulations to understand the potential of your strategy over many trades. It supports multi-pair and multi-chart testing simultaneously, allowing you to simulate a more complex trading environment. While TradingView is excellent for visual strategy review and idea generation, FX Replay is built for proving and optimizing an edge. It provides tools for automated position sizing, quick buy-sell execution, and auto break-even adjustments within the backtesting environment, truly simulating a trading terminal. So, when would you choose one over the other? If you're a new trader looking for an intuitive platform to learn charting, explore different asset classes, and visually review price action, TradingView is an excellent starting point. Its social features and vast indicator library are incredibly valuable for education and community engagement. However, if you're a more experienced trader, particularly in Forex, futures, or crypto, who needs to rigorously backtest and optimize strategies with high fidelity to real market conditions, FX Replay shines. It's designed to give you a deep, analytical understanding of your strategy's performance, helping you identify subtle flaws and truly refine your edge. Many professional traders even use both, TradingView for broad market overview and idea generation, and FX Replay for the intensive, realistic backtesting that demands precision. The choice ultimately depends on your specific trading goals and the depth of analysis you require. With that said, thanks for watching, and until next time.